Opening a bank account isn't just about storing your money, it's entering a legal contract. The moment you deposit funds, the bank becomes your debtor, owing you that money and your agent, following your payment instructions. This dual role is the foundation of U.S. banking law. Your account isn't just a number, it's a legal agreement you can enforce. The Uniform Commercial Code, or UCC, sets the rules for this relationship. You're not just a customer, you're a creditor and principal with real legal power. Every time you check your balance, remember that's a debt the bank owes you. When you make a payment, you're instructing your agent to act. This isn't just legal jargon, it's your financial power. The law is on your side, but only if you know the rules. Treat your bank relationship as a serious business arrangement, not a casual service. Understanding this gives you control over your financial life. See your account as a contract, not just a convenience. This mindset will change how you manage your money forever. Your bank has strict legal duties to you. It must honor your checks and payments if you have enough funds. This is the duty to honor. If the bank wrongfully refuses, it can be held liable for your losses. The bank must act with ordinary care, processing your transactions promptly and accurately. Confidentiality is crucial. Your account details must stay private. Regular, accurate statements are a legal requirement, not just good service. These statements help you spot errors and fraud. When a check is presented, the bank must act quickly, pay or return it within strict deadlines. The bank's main duty is to you, the customer, not the person you're paying. These rules protect your interests and ensure the payment system runs smoothly. You have responsibilities too. Keep enough funds in your account. Writing bad checks can be illegal and costly. Always review your bank statements promptly. You have a limited time to report errors or fraud. If you ignore your statements, you could lose your right to recover lost funds. Protect your account info. Safeguard your debit card, PIN, checks, and passwords. If you're careless and lose money, the bank may not be liable. You must act reasonably to prevent unauthorized access. Provide clear, timely instructions, especially for stop payments. The bank can't read your mind. Communicate clearly and follow procedures. Your diligence is your best defense. Personal responsibility is key to protecting your money. Stay alert and proactive. Your financial security depends on it. Need to stop a check? The law gives you that right, but you must act fast. Notify your bank before the check is paid. Speed is essential. Oral stop payment orders last 14 days. Written ones last 6 months and can be renewed. Always follow up an oral order with a written one for full protection. Stale checks, over 6 months old, don't have to be paid by the bank. If you find an old check, don't assume it's still valid. You generally can't stop payment on certified cashiers or tellers' checks. These are guaranteed by the bank. The law makes it hard to stop these payments to ensure they're as good as cash. Special legal processes are required to stop a cashier's check, often involving a waiting period. Know the rules for each type of check. Act quickly, follow procedures, and always get confirmation in writing. Stopping a payment is your right, if you do it right. Protect yourself by knowing the process. FDIC insurance is your safety net if a bank fails. The FDIC, a government agency, insures your deposits up to $250,000 per depositor, per bank, per ownership category. This coverage is per depositor, not per account, so multiple accounts in your name at one bank are combined. Accounts at different FDIC-insured banks each get separate coverage. Ownership categories matter. Single, joint, and certain retirement accounts are insured separately. For joint accounts, each co-owner gets $250,000 of coverage. Structure your accounts wisely to maximize protection. FDIC insurance covers checking, savings, money market deposit accounts, and CDs. It does not cover stocks, bonds, mutual funds, life insurance, annuities, or safe deposit box contents. Know what's insured and what isn't. Your deposits are safe, your investments carry risk. The FDIC has never failed to protect insured deposits. Understand your coverage to keep your money secure. Ever wonder what happens after you write a check or swipe your card? Paper checks are now processed electronically thanks to the Check 21 Act. Banks create digital images, substitute checks, that are legally valid. Your bank verifies your signature and balance, then transfers funds electronically. This process now takes hours, not days. Electronic funds transfers are even faster using the ACH network. The Electronic Fund Transfer Act and Regulation E protect you in these transactions. You have the right to receipts and detailed statements for EFTs. These laws ensure a clear digital trail and strong consumer protections. Your money moves fast, but the rules keep it safe. If a mistake happens like a wrong charge or unauthorized transaction, know your rights and act fast. For check errors, you can claim an expedited recredit. The bank must investigate and may provisionally recredit your account. For electronic transfers, report unauthorized charges within 2 business days to limit your loss to $50. Wait longer, and your liability can increase, so act quickly. Notify your bank immediately. It must investigate within 10 business days. If more time is needed, the bank must provisionally credit your account during the investigation. Once resolved, the bank must inform you and correct any errors. This isn't a favor, it's the law. If your bank doesn't resolve your issue, file a complaint with the Consumer Financial Protection Bureau, CFPB. The CFPB will help get you a response. Both you and your bank have legal duties. When both sides act, your money stays safe. Don't let anyone take away your rights. You're in control. Use your knowledge to protect your finances.